That's going to be Ali Mogharabi. He's an equity analyst at West End Capital Management there. Welcome to the show, Ali.
Hi, Tom. How you doing?
Yeah, give me your first take here on these earnings results. I'm not surprised when they came in with guidance a little bit lighter than maybe what the street was anticipating. But at the the forefront here, it was a pretty good report, wasn't it?
It was a solid report. Strong top line growth, as you said, above expectations. Margin expansion to a certain extent, and at the same time, just good news about their newest product, or the latest one, Blackwell, which there were reports that it was facing some issues, but it looks like these guys are actually exceeding their own expectations in terms of generating revenue from that in Q4, in their fiscal Q4. So overall, one of the most impressive things, though, was, I don't know if you noticed, but that free cash flow margin of 47% and change. I mean, nearly 50% free cash flow margin with that huge top line growth. That was very impressive. So overall, we still remain pretty confident in this. And I got to tell you, our firm got into this in early 2023, and we were looking at the charts in terms of top line, in terms of revenue. And since that first fiscal quarter of 2024, quarterly revenue has actually gone up 5x. So, this thing just keeps on growing. It's been pretty impressive.
It's not surprising to see those growth rates start to slow, right? 94% revenue growth. Sure. But when they say Q4 revenue is looking at $37.5 billion, plus or minus 2%, now the street's going to expect $40 billion, right? We're expecting these $2 billion beats on a quarter-by-quarter basis. Do you think the market has it where, hey, even if we do see that slowdown as far as the growth rate goes, their business is doing well. The back end, for production is starting to ramp up on the Blackwell chip, and the demand is still there, and that's the key, right, Ali?
That's the key. The demand is still there. The demand on the pre-training side, on the post-training side, we're talking about AI, overall AI, and on the inference side, which we still haven't necessarily seen that take off, is still there. On top of that, that the Blackwell that came out, that comes well integrated with that CUDA software that they have. So, if just think about the data centers, whether it's a hyperscaler or enterprise data centers, or even sovereign data centers, you get in, you install that, and it helps you grow your AI capabilities, whether in terms of increasing efficiency or generating revenue. But when it comes to upgrade, when it comes to enhancement, you're going to have to enhance that further. So that's additional growth. On top of that, if you switch to another system, given how well integrated this is, that creates a switching cost. So these guys are actually in the process of creating or developing that switching cost moat or competitive advantage. So I agree with you. From a back end standpoint, in terms of AI infrastructure, they're well ingrained, and nearly everything is becoming dependent on Nvidia's GPUs.
Yeah, the CFO did state that demand continues to exceed supply, and they expect that for several quarters into fiscal 2026 at this point. But I wanted to talk a little bit about that moat, Ali, because I think that's the key moving forward. They're the picks and shovels within AI. But as they continue to bring on customers and deliver their products and their chips, are they creating this ecosystem, kind of like an Apple ecosystem, where once you're in, you can't get out, and that's just going to be recurring revenue on a quarter-by-quarter and year-by-year basis, right?
It could be. It could be. Yeah, it could be if, of course, we continue to see more revenue generated from software, which they give some hints about in terms of how much revenue they're generating from that. I think they're going to be over a $2 billion annual run rate on that front. But at the same time, when that does develop, or if that does develop, that ecosystem, it's actually going to be stronger than Apple's ecosystem. Because again, the switching cost is going to be higher. I mean, with Apple, we're talking about consumers.
Right.
With Nvidia, we're talking about a B2B business, right? So it's going to be a big risk once this well-integrated system is implemented in various data centers by various companies. It's going to be, risky to basically interrupt that system in order to upgrade it to maybe a different provider. and so forth. So yeah, that switching cost is in the process of being developed. And yeah, absolutely. I mean, once that software revenue starts increasing, you're talking about recurring revenue continue to become a larger part of their percent of the revenue and margin expansion,
Yeah.
further margin expansion, I should say.
Yeah, and when you look at those margins, I think that's really key here because just a couple of years ago, these margins were around 25, 30%. Now we're talking mid 70s at this point. Is there any room for the upside to that as competition, coming down the pipeline slowly? But do you expect margins to kind of consolidate here, or do you see room to the upside for those?
Well, we're thinking that probably margins, as Blackwell scales, and of course after Blackwell, you've got Rubin coming along. So during certain periods, as new products scale, margins go down a little bit, and these guys guided to that because of Blackwell. But I think in the long run, margins are probably going to stabilize between low to mid 70s. I think 75% is a good assumption to make in the long run for this company.
Yeah, and against its competitors, I mean, it just blows them out of the water. What are your expectations here for the stock? Now positive on the session, which is great after being down over 3%. Do you, because I saw a lot of analyst commentary this morning, and it seems like price targets are continuing to move higher. Do you expect the shares to continue that path also?
Well, we certainly hope so. Like I said, we've been in this name for a long time, and we continue to have confidence in terms of these guys just being the backbone of the overall, AI market in different phases of that market. So in terms of, the market developing, and yeah, I mean, we're still pretty confident, and hopefully we'll continue to see the stock perform very, very well.
When you look at this, I think it's going to be reliant, really, Ali, on the fact that a lot of these big tech companies are pouring more and more capex into the spend. Do you see that continuing? In what inning are we in as far as demand goes for their chips?
As far as demand goes for the chips, I think we're still in the early innings. In terms of the hyperscalers or the big companies, those especially those cloud guys like Microsoft, Google, Amazon, continue to invest in these guys. I think they will. You have to keep in mind that even though some of them, such as Google and Amazon, have their own chips, and actually Google has been utilizing its own chips since 2017, they are public cloud providers, and they go with what their clients insist, what their clients demand, and the demand still remains very, very strong for the Nvidia GPUs. And then, of course, adding to that growth, you're talking about enterprises specifically, then themselves having their own data centers, modernizing their own data centers, building the new ones, and of course, therefore further increasing demand for the GPUs. And then on the sovereign level, I mean, different governments, certainly for various reasons, whether geopolitical, economic reasons, they're going to have to increase their investments in AI. And again, it's more likely that they will go with the current market leader, Nvidia, and what they've proven during the last few years.
Great breakdown for us. People getting more bullish, stock now above 148. All right, great discussion, Ali. Have a great day.
Thanks, you too, Tom.
All right, that's Ali Mogharabi, Senior Equity Analyst at West End Capital Management.